Hi, everybody. Welcome to our market update. This is Dean Croak. It's episode 346, believe it or not. It's July 7. We're already past the midpoint in the year. I'm here with special guest Chris Orban today. Hey, Chris. Welcome to the show.
Thank you, Dean. Always a pleasure to talk to you.
Yeah. How was your July 4th weekend in New Orleans?
Pretty quiet, actually. Plenty of fireworks, so not quiet in that sense, but pretty quiet. Low key. It's definitely warm, so I hope everybody is staying as cool as they can out there on the road today and out in the country.
Well, hopefully I'll catch up with you down there on the 23rd or 24th. I've got the Radio Nemo grand opening at the Degas House on, can't remember the street name, but we'll be down there. Hopefully you can swing by and.
Absolutely. Thank you for the invite. That'll be a beautiful spot, and I'm excited to hear that get started.
Yeah. So for those that don't know, Chris and I go back about 20 years. We worked together at Fleet Risk Advisors and Omnitrax Analytics, Qualcomm for a little while before it was sold off. But Chris is working at his own company now. Chris, tell us a little bit about what you're doing.
Sure. So my company is Journey TMS. I co-founded it with Walker Probasco, who's a good friend of mine and who I worked with at Covenant Transportation Group. We, really looked at the transportation management system market and what was available for small carriers, and really didn't see that kind of full solution like the larger and mega carriers have, where they can bring all their data into one place. They've got, safety, they've got tracking, they've got visibility, they've got communication with the drivers, all kind of in one platform. So, I think with modern technology, I think with a cloud-based system, we can do that. So we spent about 2 years and we're there now. We've got that in the market. And so we're really excited to, get people onto that from the small carrier market. We've got some new stuff just rolling out that I think Dean will let me talk about a little bit once he gets through his market analysis.
Yeah. Yeah, we've got lots of stories to share. Some we probably couldn't share on the air, but all of our days traveling around all the truckload carriers. Fond memories of our discussions with Chad England at CR England. Right. I was with Chad a little while ago, and I said, I relayed the story of you in the boardroom there. If you remember the story, I think it was Dustin England said, wait, are you really typing and talking at the same time? Because you said, I can type 200 words a minute and have an intelligent conversation. They said to say hello anyway. They were
appreciate that. Yeah.
All right. Let's dive into the market update. Some of the key things we're watching. Lots happening this week. Of course, we've got the big tariff deadline looming on July 9. So that's a couple of days away. We're not sure where that's going to land just yet. Spot rates, though, there was a surge in dry van and reefer rates last week along seasonal lines. But after 10 months, year-over-year dry van rates flipped negative. That's not... they've been positive for 10 months, but not by much. If you recall, it's been pretty flat for the last year. But being flat year over year is usually what you'd say is a flat market. Flipping negatively in June, though, that's a pretty big deal. Same in refrigerated. That usually means the start of another freight cycle. So we're not sure if that continues, but that's not good news. We did see some capacity tightness in the market. We're close to equilibrium. We saw the same sorts of market movement in spot rates that we do around Memorial Day, Mother's Day, Road Check Week, etc. So rates will come back down this week, as we'll get into a little bit later in the forecast. Of course, manufacturing numbers came in up slightly, but the new orders index of the ISM PMI contracted for the 5th month in a row. One of the notable quotes from the survey respondents, a manufacturing company that makes machinery, said the tariff mess has utterly stopped at sales globally and domestically. Everyone is on pause and orders have collapsed. It's a good read. If you want to go to ISM PMI, you can have a read of all the respondent survey responses. Zach Rogers' LMI came out last week, up about 1.3 points. I think the headline number was 60.7. While there's been positive in more recent months, it does raise question about whether the same level of demand will be present in the second half of the year. Tim Denoyer at ACT Research, his truckload demand index remained weak for the 3rd consecutive month. Lots of uncertainty in the market there. Diesel prices down slightly last week, down about 5 cents a gallon after jumping 30 cents a gallon in the prior 2 weeks. We're anxiously waiting the EIA's ULSD report. I noticed that the futures, the New York Harbor ULSD futures contract was up a few percent this morning. So I'm not sure whether diesel price is going to continue sliding or hold their gains that they've had in the last month. The other alarming news that came out last week, Class 8 truck orders down 36% year over year. Kenny Veith wrote that after 2 rounds of tariff-related equipment price increases, slower economic growth, a weakening housing and constructive sector, a badly bruised for-hire sector, and I'm quoting here, and regulatory government policy uncertainty, Kenny said it's little wonder that new vehicle demand has plummeted. Additionally, June numbers, this is typically the seasonal weak point in the year for orders, so down 36% year over year for Class 8 truck orders is not a good sign for the second half of the year. Our long-form version of today's report will be out this evening. Go to dat.com/market update. So let's dive into the short version of the market update. Load posts in dry van, predictably up last week. It's a short work week, so we don't read too much into the numbers, but it was a 4-day shipping week essentially. So you always see longer or shorter volumes around a work week like that as you post to the longer work weeks. Carrier equipment posts down also, but mainly because it's a short week. So the load to truck ratio unchanged at 6.66. Same in refrigerated, load to truck ratio up slightly, only up about 5% to 13.90. The week prior to last week really saw the surge in produce volumes, so we didn't see a lot of movement last week or tightness in the overall market, although rates did go up, but volumes were certainly relatively flat. In flatbed, volumes did drop last week. Again, not surprising. Load to truck ratio fell about 7% to 23.49. Having a quick look at some of our spot rate indices. The 7-day rolling average was up 5 cents a mile last week. Normally, produce season drags up dry van rates because capacity tightens as carriers with reefer motors jump into the reefer market to take advantage of some better rates. The national average ended the week at $1.70. It's about 1 cent per mile lower than the same time last year. On our top 50 lanes, based on volume, that averaged 203 per mile. Remember, folks, these are excluding fuel. At 203, that's up about 5 cents a mile from the previous week. It's about 33 cents a mile higher than the national 7-day rolling average. And in our bellwether states, which tend to indicate future national trends, strong correlation there. There's 13 Midwest states that make up our bellwether states. Rates were up 8 cents a mile. Outbound volumes, though, were down about 1%. Carriers in the bellwether states in the Midwest earned an average of $1.92 per mile. That's about 22 cents a mile above the national average. And in the refrigerated market, fairly tight capacity. A lot of regional markets saw a lot of volatility last week. Southeast in particular, outbound reefer loads from Atlanta, for example, up 22 cents a mile, mostly to Orlando and Lakeland. They averaged $2.87, while the national average reefer rate, excluding fuel, averaged $2.05. That's about a penny per mile lower than where it was last year. In our bellwether state for produce, California, despite a 23% decrease in produce volumes compared to last year, reefer carriers picked up another 5 cents per mile last week, averaging $2.46. However, that is still 27 cents a mile lower than last year's rates for outbound California. National average rate in flatbeds saw a 2 cent per mile decline last week along seasonal lines. It settled at about 2.10 per mile, still about 7 cents per mile higher than the corresponding week in 2024. But we do expect that gap to close after a very strong first half in flatbed. Let's dive into our short-term forecast. This is our ratecast forecast going out 35 days. That's the green line on the chart there in front of you. The blue line is the 7-day rolling average of historical rates, and the ratecast forecast is bounded by higher and lower forward-looking bands in yellow and red. So let's start with dry van. Ratecast expects dry van spot rates up a penny out to August 8th. That's the 35-day range here. This time last year, they were about $1.62. At the end or the first week of August, they'll be at about $1.70. So that's about 8 cents per mile higher. So much stronger forecast this week. It's probably picking up on some of the tightness from last week. So I'm expecting rates to be a little bit lower than where Ratecast is forecasting here in dry van. We expect a lot of softness in the freight market in the coming months, largely due to a lot of the tariff uncertainty. In the refrigerated market, again, along seasonal lines, not unusual to see rates cool off after the July 4 weekend, down 4 cents a mile out to August 8 at about $1.99. That will still be 3 cents a mile higher than where they were last year. And in flatbed, lastly, out to August 8, flatbed rates are expected to be down 6 cents a mile to about $2.03. That'll still be about 8 cents per mile higher than where they were last year. So a lot of seasonality coming into the forecast. I do think, though, that our lowercase forecast in red is probably going to be the one that I'm more closely watching because of the uncertainty on the demand side. Let's have a quick look at a couple of data points here in relation to, I'm just going to pull up the chart quickly here. We pulled up some charts here to show you where year-over-year rates. We started the show talking about year-over-year spot rates. We can see here that spot rates, new rates in the contract market on this chart here, they're up slightly, but they've been bouncing around for the last year. These are new rates entering routing guides for the first time. So these are essentially the percentage difference between new contract rates and those that are being replaced. In the refrigerated market, you can see they're down slightly. That's the red on the far right of that chart. We're seeing contract rates for refrigerated loads or refrigerated lanes come in slightly lower in the last couple of weeks. And in flatbed, they're still lower by about 3.6%. So it means that in refrigerated and dry van, shippers definitely still have pricing power. But in dry van, it's close to parity, but really it's been relatively flat for the last year. We'd have to conclude that in the contract market, shippers still have pricing power based on new rates coming into routing guides as of this week. All right, so let's bring Chris back in and talk about some of the TMS systems. Chris, easy question to start off. What's the latest with TMS for small carriers?
Well, so, it's really interesting. Everything you've been talking about here is exactly what I'm seeing in the market as well. Had some great conversations with folks in the last week or so around their plans for truck orders, really many fewer trucks kind of in the queue to be purchased. I think you hit all the high points there. In terms of technology, it's all the same asks that people are looking for. How do I get more efficient? How do I get, another load a week out of my driver? How do we find some of these extra loads? How do we fill the backhauls, especially as you talk about, the rate softening and things like that. That capacity is still kind of trying to find that equilibrium. It feels like, at least from what I'm seeing kind of out there with the smaller carriers. I think the exact same stuff that you're talking about is hitting every single layer of the market right now.
Yeah, we one of the questions we often get is, well, why hasn't capacity exited the market? And I would say, I've sort of glibly said, well, they don't need to go anywhere, right? Because when you look at where rates are for the average carrier, they're getting by, and I think they've been getting by for a couple of years. One of the things that's been very hard to quantify is that carriers did make a lot of money during the pandemic, but clearly that, we're getting to the end of that runway where those cash reserves will be eventually depleted. I did some numbers this morning. Our average, if I look at fuel at about 373, 100,000 miles a year, the average long haul spot market carrier, it costs about $1.80 a mile. So that's the average, middle of the road. Insurance is average, no claims in 5 years, 60 grand a year in wages, et cetera, et cetera. So if you say it's $1.80 a mile for the average carrier, if you're using a fuel card, you can pull about 7 cents a mile out of that. So you could be running for $1.73 a mile with a good fuel card. So that's only 3 cents a mile off where the spot rate is for dry van. So I'm at break even and I'm still paying myself 60 grand a year wage. Yep. Now I'm not making any profit. Yep. If I say, okay, if I'm running the top 50 lanes and I'm making, 202, I'm making 28 cents a mile above my break even costs. So I'm making 28 grand a year. On top of my 60 grand a year wage. If I'm in the bellwether Midwestern region, I'm 17 cents a mile better off than the average carrier. So I think there's a lot of confusion about why capacity hasn't exited the market. I think the numbers tell us that a lot of carriers can hang in here a lot longer than a lot of people expect. Now, go to one step further. If I pull 30 cents a mile for finance, truck and trailer, out of that number, I'm down at $1.50 a mile. And I'm in really good shape. So we've got an extraordinary market here where I think capacity doesn't need to go anywhere. It doesn't need to leave. And that's not what's going to flip the market, is any sort of impact on the capacity side. How do you think about that?
I think you've hit it exactly. I think that a lot of the folks who I am talking to are doing okay, and okay is variable for a lot of people. I think there are some folks who are in that, yep, $150, $200 a month. And again, this is just my experience with what I'm trying to provide to the market. $150, $200 a month for TMS, it might be too much right now. We don't want to take that risk, right? But we are seeing some more traction with people who are like, if we can get the payback for this, so they do have a little bit of cushion. I think you said something really important, which is when we compare rates and capacity and how much people are making to 2020, well, that's a huge difference, right?
Right.
Like that was an extraordinary circumstance. It persisted for longer than anybody thought.
Yep.
Those kinds of things. So I think really what you've described is exactly what's going on. We're in this sort of weird equilibrium. I think things could push us in either direction relatively easily, but right now they're not. As much as we talk about uncertainty and tariffs and things like that,
Yep.
Until something fundamentally shifts in the market, I think people are kind of holding their ground and staying with what they've got.
Yeah, I think I'll sort of caveat some of those statements I've made. I think it's a little bit tougher for the mid-size fleets. If you've got a couple of hundred trucks, you've got a much higher overhead you've got to carry. So your fixed costs are higher. I think they're doing it more. I think it's tougher for them to survive in this market. We had Chris Henry on a little while ago talking about some of the data points he shared, and his cohort of carriers are finding it harder to get by compared to the smaller operator who's more nimble and it can adjust their cost base a lot more quickly.
And you're seeing more of those mid-size carriers be acquired or get into a little bit of more trouble and maybe have to downsize or exit the market. I think you're exactly right on that.
Yeah, I'm anxiously waiting what the earnings calls for this quarter. I think that'll be a bit of a tell about where carriers think the market is at and what sort of a third or a second quarter they've had and what their expectations are for the third quarter. We're just not seeing anything on the horizon that's going to fundamentally change the demand equation. I think it's going to be a fairly weak second half of the year, even though some of the preliminary imports are coming in fairly flat. I don't know that that's going to be enough to boost the market. I still think we've got a lot of uncertainty in the market. I think that some of the biggest things I take away from the ISM report, which generates most of the demand for truckload, is like domestic manufacturing. When you read all the reports from the respondents, there's so much uncertainty. And they don't make investments if they're not sure about where the market's going to go. So if you extrapolate that out, even if we do get some certainty around trade policy, it's going to take months and months for the market to pick up.
Which is a classic issue, right? Trucking is both a leading and a lagging indicator sometimes, right? We kind of get pulled around by the market in either direction. So yeah, that's absolutely right.
Yeah, trucking doesn't create demand. It's derived from another transaction we have no control over. So despite our best wishes. This is going to be a tough year, I think, for carriers, though. Maybe this is a good way to segue into what some of the things you're working on is cost control. I did notice that with interest, part of me was happy that the speed limiter debate went away, having been the owner of a non-speed limited truck. But who
never would even come close to that, Governor, anyway. It doesn't
exactly
matter. We know that from a safety standpoint.
Yeah. So, cost control is going to be key for carriers, right? How are you working with carriers to try and trim, a penny here and a penny there? What sort of the strategies you're working on?
Sure. And Dean, this goes back to stuff we were talking about 20 years ago. This is a relatively low margin business when we can find those opportunities to get a penny back here or there, or, as I talked about, improve the efficiency so we can get an extra, order a week for a driver, or, heck, even another couple of hours a week for a driver on the road is going to make us some more money there. Mm-hmm. So, it's again, bundling those solutions together that you might have to do 5 or 6 different things from a back office perspective, or that you're asking a driver to do 3 different things for, or go to 4 different places. So let's put everything into one technology platform. Let's let them communicate. Let's let them send in, proof of delivery. Let's let them see what their ETA is. Let's let them, look at what the order notes are and the route before they have to start planning their day. Let's put things into one place where the driver can look at it, the back office person can look at it, they can communicate efficiently. And heck, if that saves, a back office person an hour a week, well, then they can spend that hour a week doing something else, maybe finding a little bit better paying backhaul, or finding a new customer or something like that. Like just getting those little incremental opportunities is what really makes a difference in this business, I believe.
You talk about a back office person. In the case of an owner operator, that could be a spouse at home, right?
It could be a spouse, and I want to be very clear. I've talked to plenty of people who are their lead driver, their head of safety, their corporate counsel, the CEO, like everything all in one, right? So, and that's the kind of thing where I think, we are past the point of TMSs being exclusive. You do not need to be a 1,000-unit carrier to have a full-featured software solution that makes you more efficient, that connects to the right solutions, that help drive your business, that give you the back office functionality that, again, you might have had to have an accounting department and an HR department and a safety department in the past. Well, now you can do that off of a website. and it's all in one place for you. And so that's really what I believe we're doing. The best sales calls I ever have are the ones where I can talk to someone and be like, hey, let me just give you the same tools that a mega carrier has now. You don't have to pay $1 million a year for them.
Yeah. So paint a picture of what the typical owner operator might look like that really needs a TMS. So what have they got? Like, do they have a spreadsheet, or are they working off apps on their phone, or are they not even quite there yet?
It's all of the above. So, I keep telling people our biggest competitor in the technology space is Excel and Google Sheets. I'll also point out that when I was at Qualcomm and at Trimble, their biggest competitor was still, even in the larger fleets, Excel and Google Sheets and things like that. There is never anything that we should always be able to export to Excel in the transportation space. I've got it as a technology vendor. I understand we're doing it for you.
Right.
But to be serious, yes, and that's what I kind of alluded to before. You've got an Excel spreadsheet that maybe has your orders, and then you're having to log into your GeoTab or Samsara portal and checking just to make sure that your hours of service. And yes, you're an owner operator, but maybe, your brother is also running a truck and you're operating under the same authority or something like that. So you're really a 2-unit fleet. Well, now I got to check and make sure that everything is going well there. Do I have the scheduled maintenance in effect? Okay, so let me make sure that there's a pilot flying J or whoever I might want to do my over the road, preventive maintenance with. Do they have availability? So I've just spent so much time kind of going back and forth to different places and trying to, make sure I've got the right log in for this particular service, and did I pay for the $5 for truckingoffice.com or whatever it is I might be using to try to send my freight invoices to somebody. All those things are just complex and just take up time in your day, and are easy to miss something. So we spend a lot of time on automation and workflow, and I'm not going to say AI, because I think that has become very much a solve everything but do nothing solution these days. I'm concerned about that. But I do think there are some very, very powerful uses for machine learning and artificial intelligence in the transportation space. But for the small carriers, I think we need to get them the more sort of basic blocking and tackling tools first before we get into automated dispatching or something like that. So again,
yeah, that's a really good point. At the Mid-America Truck Show, we were really surprised by some of the companies that are building software, AI software, that sort of the chatbot type use case, where the chatbot is doing the negotiation with the broker on part of the carrier. So that really caught us by surprise in terms of how quickly carriers had adopted that. Is that something you're seeing, and why you're saying let's step back a bit and let's do the basics first?
I think that kind of tool, that kind of use for AI and a chatbot where it can actually have that conversation, do negotiation, incredibly useful, incredibly powerful at a certain level of the market. To do that, you have to have the resources to negotiate with. You have to have the different options you can feed into a artificial intelligence model to allow it to make those proposals. There is no true AI right now. There is no thinking computer that's coming up with novel ideas. It's all using information that we have in our back pocket already. And so if we don't give that data set to the agent properly, it's not going to help us make the right decision. So if you're a small carrier and you only have, 1 or 2 options, well, it doesn't really save you a lot of time to spend, $1,000 a month on some kind of, fancy chatbot that's going to go and find you the right order. You're better off just trying to find something that matches your workflow, or even better, look at something like a load board like that has, and be able to pull the stuff in automatically and just work off of that.
Yeah.
That to me feels like the simpler, more effective, as I said, that kind of first step solution for the smaller carrier.
Is there a sector of the for-hire market that you see more need for a small fleet TMS compared to others?
So it's interesting you say that, because we have just launched the only integration with ProMiles for their quote manager for the specialized space. And so, as I always like to do when I talk to Dean, I want to expose how ridiculously uninformed I am, despite 20 years in this space. I thought to myself, wait a minute, okay, specialized, oversized, overweight, heavy haul freight, great business. I know some people who do that. I've seen the trucks out on the road. It's clearly very difficult, challenging work. I wonder if they're getting paid well for it. So we built this integration inside Journey TMS, and it now calls out to ProMiles quote manager, which goes through and finds all the permits, escort vehicles, that provides you the correct routing you would need. And so I did our first test run of this, and it came back and said, okay, to cross 5 states, it's $14,000. And I said, well, that's clearly wrong. There's no conceivable way it could cost $14,000 to haul this, 120,000 pound load across
Easily.
the state. Yeah. And I talked to Stephen, who's the VP over at ProMiles for their permit. He's like, oh yeah, that's exactly right. That's what it costs. And I'm like, oh my gosh, like this is ridiculous. Like, and so that's just for the permits. That's just to make sure you get. And then God forbid you go off route and have to come back and all this kind of stuff. I mean, that specialized world. So we've become very, very, very involved over the last couple of months, really trying to provide some tools to the specialized world. But again, a lot of those carriers are smaller, they're in that 5, 10, 15 unit range. And so, they're not purchasing a TMW suite or a McLeod or something like that. They need something that's a little more nimble, a little more focused, but does have the same kind of tools. So now that we're integrated with Quote Manager, I'm hoping that'll provide a really, really neat service to those smaller, specialized, oversized, overweight carriers.
Yeah, on social media, I follow a lot of guys that do specialized work. One of the problems they seem to run into is when they hit a state line and then there's this interpretation of the permit deal and they're stranded for days. So how do you account for that?
So I'll give you a couple of examples of that. One is if you don't know kind of to the minute when you're going to hit that state line, you can get yourself into a lot of not even trouble, because it's not necessarily the driver's fault or the carrier's fault. But if the state trooper who's going to be your escort there, if that person is an hour late, well, who cares? Except that maybe your permit is only for daytime hours or only for nighttime hours, or you have to avoid a certain geography during rush hour. All this is very, very common in the specialized space. So knowing exactly when you're going to hit a state border, knowing exactly when your escort might arrive, all those things are really critical. And that's, again, why I think we need to provide the tools to these specialized carriers, especially these smaller specialized carriers, to get them the help that they need to really be able to be accurate with their ETAs, be able to communicate. So if your pilot car, which as we talked about is kind of a dirty word sometimes in the specialized space, if your pilot car is not going to make a rendezvous, well, let's let the driver know immediately. Let's figure out how we can get them some help. Let's say, all right, look, let's get you shut down for the night because we're not going to be able to help you for another 12 hours. So let's get a 10-hour break in, and we're sitting with a piece of a wind turbine, at a safe haven, but at least we got to a safe haven. At least we're able to rest, get some food, that kind of good stuff.
Yeah. Is there a particular commodity that you're looking for, like in that particular space, or is it just everything from machinery to data centers?
It's crazy. So it's kind of everything. And I asked, we did a really fun roundtable a couple of weeks ago with some of the big players in the specialized space, and I was asking, okay, so how often are you doing the same work over and over? Are you oftentimes hauling from the same shipper? And again, varied responses. Some people are doing the similar commodity repeatedly. Some of them are specialized inside the specialized world. But a lot of folks are like, you know what? We've invested in this heavy haul, qualified equipment, the specialized trailers, the specialized power units and things like that. And so they'll take anything. And then what's super interesting, Dean, is, okay, do you have a load board for specialized backhauls? Like, no, you're insane. Like, who on earth would put a $20 million generator or steam engine or something on a load board? Because now you got a special qualification. Anyway, so now all of a sudden you've got this very expensive to run and operate equipment hauling back a standard load. And so obviously you're not getting the same rate, but anyway, the specialized world has become so fascinating to me over the last couple of months. And I'm excited to learn more and more about it and to provide more and more solutions to them.
Any integrations with you mentioned Highway Patrol, but do you any integrations beyond the trucking industry with some of those providers like the RTAs, the DMVs, those sort of people?
Yeah, so ProMiles is handling all that, and they have got an amazing system where they can act. I can't remember the exact number. They've got quite a few states connected directly to their platform for pulling the permits as well. So they can provide the route and the estimated quote, the cost for that route for any place. But there's a lot of places where unless you hit some of these states that are not quite there technologically, they can pull the permits for you automatically. And then we can display them for the driver inside Journey TMS, and they can see an image of it, so they can show that to an officer if they need to. They can review a permit and say, wait a minute, okay, we pulled this permit, but last week when I did this, I was allowed to run between 5 p.m. and 2 a.m., but now it's 6 p.m. to 3 a.m. All this kind of stuff that tends to change. All that can now be provided directly to the driver, and they can have that in their system without having to go anyplace else.
I was, as you're talking, I was thinking about an incident I had with a couple of pilot vehicles where one front, one back, 4.9 meters. I don't know what that is in feet, but 4.9 meter load. It was a combine harvester, and the driver took it through under a 4.6 meter railway bridge. So we had this convertible combine harvester, and it was like about $500,000 worth of damage. The funny thing was, neither pilot saw the 4.6 meter bridge off route, and at the call was, it's a classic, Chris. The driver said, I think it'll buff out when we get to the dealer. And I said, really? You think it? I said, anyway, I was tired. It was 4 a.m. And I said, all right, well, give me a call when you get to the dealer. That's going to be a couple of days away. And then I was thinking, laying in bed at 4:30 a.m. and I thought, hold on, this is not going to buff out. And I called the driver and I said, you better come back to the yard and we'll just check it out. So the combine harvester came back in on a 45-foot drop deck. And Chris, it was hanging off the back of the trailer. But, tired people, 4 a.m. in the morning, off route, over height, all the recipes that you need for a disaster. And he thought, his interpretation was it'll buff out as it's hanging off the back of the trailer.
Well, it's funny you tell that story, because I think we mentioned at the start, I live in New Orleans, and we have an interesting approach to traffic management here. So one, there certainly are specialized loads that pass near New Orleans and things like that. But we had, of all things, a garbage truck, get stuck on one of our freeway entrance ramps for almost 2 weeks, just because, we were missing the specialized equipment to pull it out. And so we don't always think about the, unintended consequence, or how deeply impactful some of these, what look like, a minor incident can be to the general public, and obviously to our business and things like that. Yeah. So, it's so critical that we have the right information from the states. When am I allowed to run? What are the bridge heights? Yeah. What kind of escort do I really need? So being able to pull these things together from a technology standpoint is really, really powerful. Yeah. And I think that, having to do these things manually is just always going to be an option. You can always save a little bit of money, spend a little more time, maybe feel a little more comfortable that, a human being has eyes on it. But we give you all the same options too, right? You can still look at the route. You can still verify that you're going to go to the right place and take the right exit and all that kind of good stuff. But we're going to try to save you some time, try to save you some money. Because that's another point that I should have mentioned. You can run multiple different options through the quote manager and see, all right, is there a better way to get there? Yes, this is the perfect route, but we can drop some waypoints. And, if we detoured north a little bit, or if we detoured south a little bit, maybe try to avoid some weather or something like that, we can do all of that in the system as well.
I think that's absolutely critical, because having all of that, I kind of look at it as table stakes, because you're still going to give it to a human being to execute.
Yes.
And when you've got, truckers, daylight hours, nighttime hours with curfews, getting off a port, for example, it's an incredibly mind-numbing job. Like you do make mistakes. As you taught me years ago, drivers aren't safe or unsafe. They're safe and unsafe over the continuum of time. Yeah. And that was kind of a aha moment for me, because I thought, I've been like that all my life. I'm safe and unsafe throughout the course of the day. And I think we're all like that.
Well, and it's something that I think is really, really critical to our industry, which is, I think there's very, very few drivers who want to get into an accident, right, want to go off route, right? Want to do the wrong thing. So they're trying so hard to do the right thing, but the right thing is incredibly complex in this industry. And it just gets more complex every day. Yeah. So if we can simplify things, if we can give them tools that make their life easier, then one of my favorite sayings, you let the computers do what computers are good at, and let humans do what humans are good at, right? Exactly. So computers are great at bringing a lot of information together. Let's bring that information together, and then let's let the human make the decision. Yeah. Let's let them figure out the right thing to do. And I think that's really where we're at with technology. And if we can get that in the hands of the right people, I think we're going to do very, very well as an industry. I really do.
That's a good way to wrap up the call. Chris, if people want to get in touch with you, what's the best way to do that?
Sure. So we're at journeytms.com. And of course, you can reach out to me on LinkedIn, Chris Orban. Last name is O-R-B as in boy, A-N. And then you can reach me at chris.orban@journeytms. Would love to talk to anybody in the specialized space and the small carrier space. Yeah, always great to talk to folks in the industry.
Yeah, good. Well, we'll plug this on our LinkedIn channels and YouTube a little bit later this week, so we'll get some people heading your way.
Perfect.
All right. Thanks for being on. Radio Nemo's grand opening, as we mentioned at the top of the show, is on 7/23 in New Orleans. Road Gang Radio will be there. I'll be hosting live on 7/24. You can catch them on iHeartRadio, YouTube, and Facebook Live. The Freightvine podcast, new guest out this week, Matt Menner, head of transportation at Uber Freight, is talking about the acquisition integration of Transplace into Uber Freight and talking about some of the current market volatility. Next week, a really good guest on next week, Truckers Against Trafficking. Mika Larson joins us. I heard him on Radio Nemo a couple of weeks ago. He's got some of the most amazing stories about how truckers were able to rescue some people being trafficked. They found them in truck stops just by chance. Great story. It'll be a really good show. Don't forget the CVSA Brake Safety Week has been scheduled for the August the 24th to 30th. Make sure you set up alerts for our live show, subscribe to our channel. And with that, another show is in the books. Thanks, Chris, for being on. Thank you all for watching. Be safe, be nice to everyone. We'll be back here again at 10 a.m. Eastern, 7 a.m. Pacific next week.